everyone, I'm Rocio Rochelle. I am your local realtor, and I wanted to, as video number 1 of this new interview series that I'm going to be doing, just to keep you guys in the loop and keep you guys informed as to, what's changing in the real estate industry. I have a special guest today. His name is Tim Manfro. Say hi, Tim.
Hello. How you doing?
He's my go-to lender. A lot of my clients have used him and they absolutely love him. So he's gonna share his insights of what the mortgage industry is like, and I'll share my insights of the real estate part of it. We're gonna answer some questions that I've been getting a lot in my inbox, and I'm sure Tim has been getting as well. The first question is it a good time to buy? Right? There's so many. Yeah.
I mean, that's the number one question that people are asking. So
yeah. People are concerned. It is a bit of a scary time. There is uncertainty in what's going on, but we're going to kind of answer those questions and alleviate your concerns a little more so that you do feel comfortable in moving forward in purchasing or even selling a property.
You want to jump to the first question? The biggest thing right now on my side, and maybe you could chime in.
Yeah.
Just the rates are just unbelievably low. I mean,
right.
It's crazy. I mean, I've been doing loans since 2007, and I've seen, the crash before that we had right after I got into the industry, and then the recovery with the rates and Brexton and all the different kinds of ups and downs, and rates have never been as low as they are right now. It's just out of control. Obviously, they vary depending on your certain situation.
Mm-hmm.
But, what we were chatting about a little earlier was kind of like giving you guys some examples so you can see the actual real numbers and how they affect you monthly, payment-wise, and maybe over the life of the loan. So we decided what 550 was a good price.
550 is a good range, I think.
So that would be the purchase price of the house we're going to use as an example.
Mm-hmm.
And obviously the rates vary depending on the situation, but we're going to use someone that has a credit score of 720, which is good, but not like super robot, 800 and not, on the lower side. So yeah. This would be for conventional financing. And we ran some numbers before in regards to interest rates, and like for the exact same loan that we're going to talk about right now, which would be a 5% down payment loan, okay, on a 550 purchase price, the interest rate was about 4.5% in January of 2019. So that's not that long ago. We're talking, over a year, but really a blink of an eye, for most of us. And now today for the exact same loan, we're looking at 3.25% rate,
mm-hmm.
which is just a monster swing. I mean, we're talking about some of the lowest rates in the history of rates right now.
So what does that mean, Tim, for buyers, really that big jump in, I guess, not jump, but jump down. Yeah. Right. What does that mean for buyers and their buying power?
Yeah. So basically the payment would be hugely different. Okay.
Mm-hmm.
That's going to be the monthly change for them, which is kind of the most important thing for most people at this point.
Yeah.
So we're looking at a payment at 4.5% rate, and this would be with principal and interest, real estate taxes at 1.25%, which is just like an average estimate.
Yeah.
You'd have your hazard and homeowners insurance in there, estimated at $80 a month.
Mm-hmm.
But also have mortgage insurance because you're putting less than 20% down on a conventional loan. So the total payment with all that stuff together at 4.5% was $3,465. Okay, so that's what someone would be paying per month. January 2019, rate of 4.5%.
Mm-hmm.
So basically, rates now being at 3.25%, we're looking at a payment with everything all together of $3,092. Okay, so we're talking about a swing of $373 per month.
Mm-hmm.
Okay,
mm-hmm.
It could be like a small car payment. That could be used for anything really. You can just put it in the bank or save it for a rainy day. If you use it to fix up a house, $4,476 a year. Okay, and then the long-term savings. This is if you were to keep your house for 30 years, which is kind of probably not going to happen, but just to throw some numbers at you.
Yeah.
The total interest saved over the life of the loan is $134,452. So
that's a good chunk of change.
That's huge. I mean, that's like you could buy a little investment property. That's money to put on something else. I mean, you've seen people buy houses and keep them as rentals and buy another house, without actually selling that one. So it's a possibility.
Oh yeah, for sure.
That can be a huge savings over time, giving you that positive cash flow.
So Tim, also what we were talking about is because of the change in the interest rate, that kind of can mean that you can buy at a much higher price point, right?
Correct.
If you qualified for it, right? It can mean from buying from one city to your ultimate dream city.
Yeah, I mean, technically it's the same payment. So we did a little calculation because I thought that we thought this was kind of interesting. So let's say you were buying at 550 in January, and the rate was 4.5%, the payment that we discussed before. And let's say now today the rates have dropped that much. You're at 3.25%, but you're still comfortable with that payment of $34.65.
Mm-hmm.
The price of home that you could afford would be $625,000.
Wow.
I mean, that's you. I mean, you know,
insane.
I mean,
That's yeah. You can be either in Baldwin Park or in Glendora, even.
Yeah.
Yeah.
I mean, it's a huge difference. Different schools, different, different everything, really.
Yeah.
A lot of, or maybe even just a bigger house. Another bedroom and a home office. Who knows?
Mm-hmm.
So, I mean, that's a huge swing right there. So, I mean, your buying power is substantially higher right now than it was just in January of 2019, strictly because of the rates. So, I mean, that's something that's pretty.
So that's something that I am telling buyers right now when they ask me, is it a good time? I mean, even though it feels very unstable and uncertain, and I'm pretty much telling them if you get a great deal, which I am seeing a lot of great deals come up right now, because there's not a lot of competition. Not everyone is feeling confident to moving forward to buy a house.
Yeah.
If you get a great deal, the perfect house that you've been looking for in a great neighborhood, and you're getting a great interest rate, it's kind of like a why not, right?
It's like all the boxes are checked saying that even in the crazy times that we're having right now, it's still a good time, and that's basically the numbers and kind of the truth of everything that's going on right now.
Right.
We're
So
getting a bunch of offers accepted.
Yeah. Something else that we were talking about, Tim, waiting, right? Because some people are like, maybe we should just wait if it feels like it might not be the right time. In waiting, just like how even the real estate experts really can't predict what's going to happen, right? One expert can say one thing, the other expert can say something completely different. We can't predict what the rates are going to be, right? So even if they're low right now, and they've kind of been volatile for a while, so I don't know, your buying power is going to be drastically reduced if you were to wait, and we don't want that either.
Yeah, no, I mean, the rates could shoot up. I mean, they've changed quite a bit even over the last couple of months. They jump back up, jump down. So I mean, there's really no telling if they're going to be staying the same or going up. And I mean, I think the big fear that people have, and I'm sure you hear this because I hear it all the time, is like, hey, this house is going to be like way cheaper, in a year, and it's going to be a way better deal, and I'm going to get into the market, and it's going to totally change. I mean, what are your kind of thoughts on that part of it? I mean, the price is changing probably in the future, and obviously, like we said, we can't predict it, but
But just because, well, like I said, if we can't predict the rates, even if the home prices did go down, since we can't predict the rates may double up, just like how they did in 2009. You know what I mean? So your payment ends up being almost the same thing because your interest rate is higher. But what that means is that you're paying less into, right, Tim?
Yeah.
To your actual house, you're paying more money to the bank, really.
Yeah. Well, I mean, I think we were talking about something interesting earlier too, and I think you should bring up is the swing in the prices of houses in that area that we were talking about since January 2019 to now.
Mm-hmm.
Like, tell me a little bit more, or break this down for everyone a little bit more about that.
Yeah, it was really just a difference of 2% from last year to now. So we're not seeing that huge jump. Kind of going into that, this isn't a housing crisis, right? So I'm getting a lot of, the home values are going to go down because there's going to be another crash of 2008, 2009. It's not a housing crisis. This is a health pandemic. You know what I mean? So it's something completely different. It can affect housing. We hope that it's not, and I don't think it is, but it's not a housing crisis.
Yeah, and I mean, like that 2% on the 550 is like $11,000. So I mean, the house that you would have bought in January was $11,000 cheaper than it is now.
Mm-hmm.
But the rates are like 1.25% lower, which is making everything kind of make more sense. So
right. And for $11,000, Tim, what does that look like in the span of 30 years, right? Because if someone's going to give up on the opportunity of a lifetime, let's just say it's the most perfect house,
it's like $30 a month. I mean,
Yeah.
it's, so it's not going to be a huge swing savings monthly wise, which is usually the most important thing because that's the payment you got to pay. So
yeah. What I tell buyers, Tim, is that that are interested, just go ahead and get in touch with a good lender like Mr. Tim. Hey, Tim, and then submit whatever paperwork that he requests from you. So he can go into that maybe after what he'll request to get a pre-qualification. Once we have that pre-qualification, we're good to go. We can start looking at houses. We can start submitting offers. We can't submit an offer without that pre-qualification. Otherwise, they won't really take us seriously. And we can, like I said, pretty much be 100% ready for when that deal does come. We can go ahead and submit an offer and actually be considered for the property. Because it's happened to me before where a client was, kind of on the fence about buying. They were, looking at different online sites for houses. They finally found the one that they liked and they say, okay, I'm ready. I'm finally ready to get pre-qualified. They submit all their paperwork. This wasn't with Tim, by the way.
Yeah, hold on.
For the record, they submit all their paperwork. They get their pre-qual. By the time they get the pre-qual, the house is already pending.
Yeah.
The seller already made a decision. All the good deals always go super fast. I've seen them even within the same day go pending. So if the perfect house comes up, you want to be 100% ready to go ahead and submit an offer and actually be considered.
Yeah. And I mean, the pre-approval process now hasn't really changed a ton, only that we're not meeting in person. But we have all the ability to do things electronically. And even for people that aren't comfortable with computers or scanning documents, we have a great system that we actually have a FedEx overnight label that's sent to them. They can stuff all the documents in there. We'll schedule a pickup at their house. So they'll pick up the actual paperwork. It'll come to us overnight. We'll make a copy of it and you'll have it back within 24 to 48 hours. Okay. So you don't even have to make the copies or worry about it. If you just have the hard copies, you stuff it in the thing and it goes there, it goes back. You don't have to leave your house. So that's one thing that we've used a lot that made a difference just to avoid the contact situation because of what's going on. So
yeah, so that's kind of your process now, right? Everything virtually.
Yeah, exactly. Digitally or mailed back and forth or fax. So
yeah. So pretty much in a nutshell, Tim, your buyers, your clients that are asking you, is it a good time? In a nutshell, what's your answer to them?
I say if it makes sense for you right now, then it's a good time.
If you're an essential worker, right? Especially if you're an essential worker and you know that you're going to have a paycheck, your income is stable, I feel like you have nothing to lose, really.
Yeah, no, I feel like the upside is way, way bigger than the downside. And I mean, I always just tell people if it's the right time for you, the payment has to make sense for what you can afford and where you want to live. And if it does, there's no reason to be scared of what's going on right now, as long as you're confident in your employment situation and stuff like that. There's some really good opportunities out there with rates and properties because the competition is just not as much as it was even 6 months ago. So
yeah, I think the biggest thing to keep in mind is that a lot of people are just waiting for that better deal to come. It's happened to, especially these past 10 years, right? For my clients, it's like they've always been waiting for the better deal to come or for the houses to go down lower, and it never came, right? Yeah. So a house that they could have bought at $300-400 now is worth $600, and it's totally out of their price range.
Yeah, I mean, I've only owned my house for what has it been? 6 years, and I bought it for $480,000, which at the time was like, I was like scared to even spend that much to have that payment. And now it's worth like close to $800,000, I mean, that short amount of time. And it was a beater, it was beat up, I fixed it up. That's an extreme case, but like I'm doing loans for people right now that are refinancing or purchasing that they have tons of equity. They never would have been able to save up that much money. Like they've created all this wealth that they could either tap into to buy another house in a different area or just have that money as a nest egg. So, owning is, I'm a big supporter of owning, big fan of owning if it makes sense for the payment in the area you're going to live in. So
what about refinancing, Tim? Like you were talking about, since the rates are lower, what is it that you're advising your clients that do have that equity?
Yeah, I mean, basically, getting a refinance quote's super easy. You don't have to run your credit. They don't make, we don't make you run through that. I have a website that you basically can submit a refinance request. It's www.refywithmm, which stands for mortgagemanfo.com. Maybe we'll put that somewhere. But basically you just to fill out about 10 questions. It's going to ask you about what the value of your house is, and your balance, type of loan, credit score, a few things you're going to fill out. You have a quote within 24 to 48 hours, but basically, people are saving anywhere between $200 and $700 a month on refinancing right now because
That's insane.
they got loans in, 2018, 2017, 2018, 2019. Some people are having interest rates like 5.375, or they're going from FHA to conventional because their equity's gone up so much. So there's a lot of opportunity to refinance too, to just reduce your payment. Or I'm doing, for some people, they're pulling a down payment out of their house and cash out to purchase an investment property. So because or a second home. I'm having people buy houses, in Big Bear and Arrowhead area, taking money out of their primary home. Their payment's actually still going down, and they're able to use that money to get a second home in the hills or an investment property. So
yeah, that's a good idea. If you have that equity,
yeah,
buy that investment property, especially coming soon that we're gonna see these great deals. And what I mean by great deals really is that there are some homes that are sitting a little bit more time on the market, right? Because of everything that's going on. So we do have a lot more buying power.
I even put together like a little, I did a presentation a while back where we were talking about the rents right now are just crazy. Like, so now's a good time to be a landlord, and with the rates being so low, even for investment properties, they're obviously a little bit higher than they are for primary, but that's giving you a little bit more cash flow or giving you a little bit more opportunity to bank some monthly money, from the rent that you're going to collect from someone that's renting your house out. So
yeah. Now, Tim, what are some new updates? I know there's been some changes, right, in the mortgage industry.
Yeah. So basically, New American Funding, I am so lucky to work for this company. Can't say enough great things about the company themselves, what they've done to make sure that we're able to just keep churning loans out. We did $2 billion in loans last month, which is the most that our company's ever done. We're nationwide. But basically some of the changes that's happened is been for the better for the most part. So everyone was really worried about appraisers going into houses with everything that's going on, and are they going to get sick? Are they going to get other people sick because they're going to multiple houses? So Fannie Mae and Freddie Mac and also FHA have allowed drive-by appraisals instead of actually having appraisals required where the appraiser is going to have to go in the house. So they'll actually be able to still operate, still use the pictures that are available online, and still do all the research that they would do to, figure the value out. Yeah. So you still have an appraisal report, but we're not having things slow down because of the coronavirus or the pandemic thing. So, and then basically all the loans are still available. There's still 3.5% down FHA loans. There's still 3% down conventional loans. There's still 0 down VA loans. So
you're not requiring this whole 720%.
Yeah. Oh my gosh, that's so crazy, right? Yeah. You were talking about that earlier. Chase, you said Chase came out.
I think it was Chase. One of those big banks, yeah.
700 FICO score was required with 20% down, or they weren't going to lend to you.
Right.
So all of our requirements are still the same. There's still down payment assistance available. So, everything on our end is still firing, all cylinders go. So.
Okay, cool. Did you want to add anything else, Tim? I think
that's it.
Notes.
I think the biggest thing would be just getting more questions to answer. So, right. So, I know I'll be reaching out to a bunch of people. I'm sure you will too. But if anyone out there has additional questions for us on the mortgage side, real estate side also.
Yeah. Let us know, because we definitely want to keep you guys informed of really how everything's changing. So let us know if you guys have any questions or concerns. Even reach out to me, reach out to Tim, and we'll make a video, or we'll keep it personal. We do a lot of Zoom calls. That's the new thing now. If you guys are interested in some type of consultation, or not even a consultation because that scares people.
It's just a conversation.
Yeah. Just to go over what your particular scenario is and what's the best for you. Again, reach out to me, reach out to Tim, and I guess that's it, Tim.
Think so?
Yeah. Stay safe out there. Be well. We'll see you guys on the next one. Bye.